Hey everyone, Tom here. Just a very quick note before we get into this video on Alibaba and their plans to break the company up into 6 different business units. They have announced that they're actually going to have a conference call where presumably management are going to get into a lot more of the finer details on how this plan is going to look of splitting the company up into their various different business units. So consider this video sort of an initial reaction going through the news that Alibaba released on their initial plans, some initial thoughts and reactions from me, and then I'll aim to do a part 2 video going through some of the highlights of this upcoming conference call, which is probably due to start not too long after this video goes live. But with all that said, I hope you enjoyed the video. And just the fact that it's 69% of revenue and more than 100% of profitability probably provides pretty good argument as to why you might want to approach valuing Alibaba on a more of a sum of the parts basis as opposed to trying to value the overall pie. I think if you can get into a little more of the detail of the value of the different components, that might be a better way to go about it. Although a lot of their businesses are loss-making right now, that certainly doesn't mean they have a negative value. So some of the parts could certainly make sense here. Well, it happened. In an effort to make the value of their various businesses more obvious to investors, among other things, Alibaba this week announced a plan to split their company into 6 different business units. Each of these different business units will have its own CEO, its own board of directors, its own ability to raise outside capital, and when it's ready, it will even have the ability to IPO. The news follows a rare public appearance from the Alibaba founder Jack Ma in China just a couple of days prior, and in this video I want to cover what the announcement specifically actually said out of Alibaba, as well as what it potentially means for the business and for Alibaba investors. If you enjoy the video and haven't subscribed to the Investing with Tom channel already, please be sure to do so, but without further ado, let's get straight into the video. Okay, now firstly let's just go direct to the source and actually read through what Alibaba specifically announced, this coming directly from the company. It says, Alibaba Holdings Limited announces a new organizational and governance structure to empower all our businesses to become more agile, enhance decision-making, enable faster responses to market changes, and promote innovation to capture opportunities in their respective markets and industries, thereby unlocking the value of Alibaba Group's various businesses. Under this plan, we will have 6 major business groups and other investments, each to be independently managed by its own chief executive officer and board of directors. The 6 major business groups that we plan to establish are 1. Cloud Intelligence Group, including cloud, AI, DingTalk, and other businesses, with Daniel Zhang serving as Chief Executive Officer in addition to his responsibilities as Alibaba Group's Chairman and Chief Executive Officer. 2. Taobao Tmall Business Group, including Taobao, Tmall, Taobao Deals, Taobao, 1688.com, and other businesses, with Trudy Dai serving as Chief Executive Officer. Number 3. Local Services Group, including AMAP, Ulama, and other businesses, with Yongfu Yu serving as CEO. Number 4, Global Digital Business Group, including Lazada, AliExpress, Trendyol, Daraz, Alibaba.com, and other businesses, with Fan Zhang serving as CEO. Number 5, Kainao Smart Logistics, with Lin Wan serving as CEO. And number 6, Digital Media and Entertainment Group, including Youku, Alibaba Pictures, and other businesses, with Lu Wanfan serving as Chief Executive Officer. Each business group will also have the flexibility to raise outside capital and potentially to seek its own IPO, with the exception of Taobao Tmall Business Group, which will remain wholly owned by Alibaba Group. Now, as well as that regulatory filing, there was also an email from Alibaba Group CEO Daniel Zhang that went out to Alibaba employees, and a couple of highlights that I pulled out of that email that's been shared online was 1. This transformation will empower all our businesses to become more agile, enhance decision making, and enable faster responses to market changes. And 2, the market is the best litmus test, and each business group and company can pursue independent fundraising and IPOs when they are ready. Now, firstly, let's talk about the actual fundamental business changes. I think there's a few positive takeaways from the sort of business side of the announcement, with each of these business units having its own board of directors and CEO and so on. There's 3 things that really come to mind here. 1 is a management with much more kind of intense focus, I would imagine, on their specific business unit rather than having to worry about various aspects of Alibaba's business. Secondly, in terms of capital management, each of the businesses are going to have to think much more intensely about how they manage their capital resources. At the moment, for example, we have the China commerce business within Alibaba making up over 100% of Alibaba's profitability and really in a lot of ways kind of funding the loss-making businesses. If those companies are now split out and kind of having to lead their own lives from a capital perspective, that will hopefully mean that those management teams are a lot more disciplined in terms of how they manage raising capital, deploying capital in the business, and then hopefully generating strong returns on capital moving forward. And thirdly, just around speed and competitiveness, when you have sort of a large business like Alibaba, I suppose it can take some time to sort of maneuver the giant ship that is Alibaba in terms of their competitiveness. Now, I don't know how much of that has really been an issue for Alibaba in the past. It seems like although the Alibaba group overall is kind of mammoth beast, they do have more nimble business units kind of under the hood, but it seems like this is a further push in that direction. Now, of course, there are lots of great cases where a more decentralized approach has been very successful. Berkshire Hathaway is a great example where Warren Buffett sits in Omaha kind of allocating capital amongst the various businesses, but he really doesn't have a whole lot to do with the day-to-day running of, for example, Berkshire Hathaway Energy or Burlington Northern Santa Fe or See's Candies or anything like that. Each of those businesses has their own executive team to make decisions within those companies and make operational decisions within those companies as well. But at the same time, I'm not really sure how well that model sort of relates to Alibaba. If you read some of the history of Alibaba and how they built their competitive advantage in China, particularly in e-commerce, there's a lot of talk about the iron triangle, which is where you have three sides of the triangle all working together in order to offer a great product and service to the end e-commerce customer. And those things are one, e-commerce, having a website with a large range of kind of product selection and good prices. Secondly, logistics, having efficient and affordable logistics networks throughout China. And thirdly, you have payments, being able to use something like Alipay to easily transact on these e-commerce websites. Now we seem to be heading in a direction where those three sides of the iron triangle are potentially going to be managed very separately. The payments business already lives within Ant Group, or previously named Ant Financial, so that has already been separate for some time. So it'll be interesting to see how the overall kind of customer experience changes, if at all, with splitting out some of these other underlying business units like logistics. Now, the thing that I think will have jumped out to a lot of people from this announcement is the ability for each of these 6 business units to potentially raise their own capital and at some point in the future when they're ready have their own IPO. You know, if we took it right to the extreme, it could mean that potentially Alibaba shareholders today may eventually own shares in each of these 6 different business units. Now, that doesn't necessarily mean that value is just manufactured out of thin air. You already own these 6 business units with owning Baba, for example, on the New York Stock Exchange, but it does mean that we're likely to get the market valuing each of those 6 different business units independent of one another. We could theoretically, for example, in future look up the stock price for the main Alibaba group, which will, by the sounds of it, be largely just Chinese e-commerce and perhaps some other investments like Ant Group. You could then look up the stock price and the market cap for the cloud business, for local consumer services, for Kainao, and also for digital media and entertainment. And that would mean that sort of a sum of the parts type valuation that a lot of people really argue is the best way to go about valuing Alibaba. I'm kind of in that camp as well. It means that that kind of comes to reality. At the moment, you really do have a situation where if you just purely kept the China e-commerce business and got rid of every other business in Alibaba, earnings would likely go up. The China e-commerce business represents more than 100% of profitability. In a way, it's subsidizing some of of the smaller loss-making businesses. But these spin-off events are certainly nothing new to the stock market, and they're not always the magical unlocking of value that they are kind of promised to be. An example more recently is something like the Warner Brothers Discovery spin-off out of AT&T. That's down about 40% since that was spun out of AT&T a year ago. Time will obviously tell whether that works out well or not, but that's an example of one that hasn't worked so well. There are, of course, examples of ones that have worked absolutely phenomenally. One that comes to mind would be Ferrari getting spun out of what's now called Stellantis, but what was previously Fiat Chrysler. Ferrari was kind of hidden within the Fiat Chrysler business. It was spun out, and it now actually has a market cap roughly equivalent to Stellantis. You also have to keep in mind that when Fiat Chrysler became Stellantis, they did that through merging with a very similar sized company. So in all reality, Ferrari, with a $50 billion market cap roughly, is actually much more substantial than Fiat Chrysler was in its entirety when Ferrari was first spun out. And that, I think, is why the market has reacted so positively to this news. The stock is up roughly 15% on the day after this announcement from Alibaba. They seem to think that it might unlock some value by making each of the individual business units potentially trade separately if they were all to IPO at some point. But we will have to see how that plays out. The stock market is not a stupid place, and it's not like they don't recognize that these other businesses exist within Alibaba Group right now. Now, aside from some of those sort of quantitative elements of why you might do a spin-off, I want to sort of cover why you potentially might not want to do something like this. One of the main questions that I would have following this announcement from Alibaba is how it impacts Alibaba's long-term goals and kind of business mission, if at all. You know, if we look at what Alibaba say in that department, which they've been pretty consistent on for a long time now, is that their mission is to make it easy to do business everywhere. Their vision is that we aspire to be a good company that will last 102 years. If you don't know, that 102 years is so that Alibaba spans 3 centuries. They were founded in the late 90s. We envision that our customers will meet, work, and live at Alibaba. Our vision for fiscal year 2036 is to serve 2 billion global customers, enable 10 million businesses to be profitable, and create 100 million jobs. Our values are customers first, employees second, shareholders third. Trust makes everything simple. Change is the only constraint. Today's best performance is tomorrow's baseline. If not now, when? If not me, who? Live seriously and work happy. So it will be quite interesting to see if splitting these businesses out into 6 different units changes that culture in any way, or whether this kind of long-term culture that's been in Alibaba for over 20 years now continues to persist in kind of 6 different little ecosystems. So where to next following this announcement for Alibaba, the business, and for their shareholders? Well, there's kind of 3 things that I'll be keeping an eye on following this announcement from Alibaba. Top of the list is really just if and when these IPOs will actually happen. Hopefully we'll get some clarity on that as time goes on. I'm sure we will get clarity on that as time goes on. And the real litmus test, I guess, is, as Daniel Zhang put it, is how the market values each of these individual business units as they start to IPO separately. Will it actually create any incremental or additional value for existing Alibaba shareholders, or will the sum of the parts across all of these potentially different stocks that may end up listed on the New York Stock Exchange or the Hong Kong Exchange, will the sum of all the parts just be the same as the current value? I don't really know. That's something that we'll have to watch play out over time. Secondly, it seems like one of the other reasons that Alibaba are doing this is simply to be more nimble and remain competitive in their various different lines of business. So I really want to see how the results actually play out from that. If we still look at Alibaba on a consolidated sort of overall Alibaba Group basis over the next couple of years, are the consolidated results actually getting better, and are they getting better, or is the overall business just performing kind of the same as when they were one large Alibaba Group entity? I'm also very much looking forward to the next set of Alibaba quarterly earnings results, not necessarily for the quarterly numbers themselves, but mainly for the conference call that will happen with management that they tend to do each quarter. I'm really hoping that we get some more clarity on exactly the plans here in terms terms of splitting Alibaba up into these 6 different units, and hopefully we get a bit more info in terms of the timeline around how long it will take these things to happen. So some big news out of Alibaba this week. Still really a lot of unknowns, but those are some initial thoughts on Alibaba, the business, what it could mean for investors, and some things that I'm watching moving forward. So let me know down in the comment section below what you make of this recent announcement for Alibaba. Do you think it'll make Alibaba's true value more apparent to most investors in the stock market and make the underlying businesses more nimble? Or do you think there's just been a bunch of investment bankers in someone's ear at Alibaba and this is all a terrible idea? I would really appreciate your thoughts down in the comment section below. If you haven't subscribed to the channel already, please be sure to do so as well, and I will see you in the next video. Cheers.